Can we short Bitcoin if it breaks the support? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. Now, click the link below. After completing KYC and depositing $100, you'll receive a Bitcoin contract position worth $1,000. What are the steps? First, click the link below. Complete KYC and deposit $100. Then, you can choose whether you want a long or short position, which will be set up for you directly. It will be a Bitcoin position worth $1,000, meaning that if the market moves in your chosen direction by 10%, your capital will have doubled. Now, let's return to the Bitcoin market. In fact, I believe that on the daily chart, the trend has completely changed. It is no longer in an oscillating state, but has transitioned into a bearish trend. Let's discuss the current market situation. It is gradually moving toward a market favorable for short positions. In other words, it's a bearish market. To determine this, let's refer to how we identified the transition into a bullish market last time. Now, we will apply the same methodology and see if it is applicable. If it is, it will demonstrate that our current assessment is objective. Let's go back to the previous transition for reference. In that instance, you can observe that it first broke through the long-lasting range of oscillation, indicating a high probability of a trend change. It was a breakout accompanied by high trading volume, followed by a series of consecutive long candles. Furthermore, let's examine this level. The price actually broke through a certain line. This line. After breaking through this line, it initiated a strong upward movement. It happened once this line was broken. Also, we can look at the moving averages. You will notice that in the daily time frame, they turned bullish, and the candlesticks held above the moving averages before the start of this bullish trend. Alright. In fact, we have one final method of analysis. We can look at the oscillation points. You'll notice that in a bullish trend, the market will continually create higher highs and higher lows. Here, we have a higher high and a higher low, indicating without a doubt that this is the beginning of a bullish trend. The early stages of a trend are the most opportune, and often see the fastest price increases. Even if you enter the market at this point, you will still have plenty of opportunities to profit from the upcoming price movements. Currently, I believe that the market has shifted to bearish sentiment. Okay. We discussed this viewpoint in previous videos as well. You'll see that it has become very clear with the formation of lower lows and lower highs. Okay. Furthermore, if we observe the moving averages, we can see that they have arranged themselves in a bearish manner. The short-term moving average is below the long-term moving average. Additionally, the price candlesticks have consistently been suppressed by the moving averages without regaining strength. If the price were to stabilize and regain strength, we might expect oscillation or consolidation. However, if it continues to be suppressed by the moving averages, the market remains bearish. It is still bearish. Furthermore, we can observe a broken pattern, specifically a box pattern in the upper region. You'll notice that the upper range has been moving in this area. So, when we look at the upper range, we see that it formed a box pattern. Additionally, it even appears to resemble a head and shoulders pattern. Here, we have the left shoulder, then the head, followed by the right shoulder. After breaking below the neckline, it consolidated. But ultimately, it seems that it's still inclined to move downward. It is currently below the previous support level, acting as resistance. It's important to note that it's facing resistance, rather than being supported. Okay. Now, let's zoom into a smaller time frame. From the 4-hour chart, we will notice that we have a trend line in place. The price has broken below this trend line. Supporting the prices here, we can see multiple touch points. Although there was a minor support at one point, it eventually broke below. You might argue that the volume during this 4-hour time frame is not very significant. However, I believe there is still room for further development in this downward move. Of course, for the bearish scenario, we would like to see longer and stronger bearish candlesticks, accompanied by higher volume. However, you may point out that the current volume isn't very large. Nevertheless, I think that the volume we have is already sufficient. Why? Because let's not forget that we are looking at a 4-hour candle. This particular candle is not yet closed. It's only halfway through. We still have approximately 1.5 hours until the candle closes. Considering that we're based on the GMT plus 8 time zone, where we start counting from 8 p.m. in a 24-hour clock, this would be around 2000. And counting until 2400. So, currently, We have approximately another hour and a half left for this 4-hour candlestick. In the past 2.5 hours, a significant amount of accumulation has already taken place. If this accumulation continues and reaches a similar level in the future, I won't be surprised. It would represent the largest candlestick in the entire price oscillation. I reckon that this amount of volume is sufficient. However, we need to consider the length of the candlestick. At the moment, it has a small lower shadow, but it remains within an acceptable range. Furthermore, we can observe that at this level, a box pattern has formed. This box pattern has been tested both upward and downward, but the price tested the lower boundary more often. As a result, the support below is relatively weaker compared to the resistance above. So it is not surprising that a downside breakout occurred. It may seem like a hindsight analysis, but it was actually discussed in previous days, not just today. Now, let's zoom in on a smaller time frame. If we zoom in further, we can see that the recent upward movement can be classified as an unsuccessful attempt by the bears. Why so? As you can see, when the price tested the upside, there was an increase in volume. It's a considerable volume, and the volume was relatively moderate and consistently contributing to the market. However, the price didn't directly break to a new high, and it didn't break above the resistance of the box. I would consider this situation as a display of the bullish side's strength in attempting a counterattack. But it failed. This failed counterattack indicates a situation where bullish efforts didn't yield any results, and as a result, it was directly countered by the bears. Currently, the bearish side appears to have a stronger presence compared to the bullish side. You can observe the volume conditions, right? These 3 bars represent significant trading volume. Additionally, in terms of the range of fluctuation, you will notice that the bearish movement has a much larger amplitude compared to the bullish movement, which is relatively mild. Therefore, I believe that the current market condition favors the bears, especially after breaking below the lower boundary of the box pattern. We are now waiting for it to fall below the previous low point. Once that level is breached, wow, we can expect a deeper pullback. Let's switch back to the previous time frame. In fact, the bullish efforts have been unsuccessful, not only at the recent level, but also at other testing points. You can observe that during the upward movement, there was some continuity in price increases, accompanied by moderate trading volume continuously. However, the bullish momentum was halted at the upper resistance level, and was followed by a large bearish candlestick, resembling the current situation. This indicates that the bearish side is comparatively stronger. Now, let's shift our focus to Ethereum. Compared to Bitcoin, Ethereum has shown relatively more strength. Therefore, if you are considering a short position, you may choose Bitcoin as your primary option. Bitcoin has already broken below a critical level, while Ethereum is still holding up. Thus, Ethereum can be considered relatively stronger. Go for Bitcoin if you want to make a short call. However, it is important to continue monitoring the exchange rates and other relevant factors. Alright. Thank you. You're welcome. To like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye bye.